Hey everyone, and welcome back to Sip and Talk.
Good to be back. Ready to dive in.
Totally. So today we've got something kind of fun, kind of different. We're looking at an investment report from our good buddy Micky.
Yeah. You know, we were sort of joking with him, like, hey, Micky, how about a little ad swap? You mention us, we mention you.
Right. And somehow, I'm still not sure how, that turned into him actually sending us his, personal investment thoughts.
I know. I was like, whoa, okay. So big thanks to Micky for the content. Haha. Gave us something interesting to chew on.
Definitely.
Okay.
Okay. But before we get into it, we absolutely have to put up the big flashing warning sign.
Oh, yeah. Super important. Disclaimer time.
Look, neither of us are investment professionals.
Okay.
At all. And Micky, great guy. But he'd be the first to say he's not giving financial advice either.
Exactly. This is just us chatting about his perspective, his ideas. It's for fun, for information, maybe spark some thought, but it is absolutely not advice.
Please do your own homework. Talk to a real financial advisor before you make any decisions.
Okay.
Promise.
Good. Think of this as, eavesdropping on a discussion about Micky's strategy, not a roadmap for your own money.
All right, with that covered, let's get to the first big question Micky tackles. It's the one everyone's asking. Gold. Is the party over? Has its run ended?
Ah, yes. Gold. It's been on quite a tear, hasn't it? So Micky's take is, well, it's nuanced. He's a bit skeptical, maybe.
Skeptical like, sell everything now, or skeptical like, hang on a second.
More like, hang on a second. His main point is that the biggest move for gold, what he calls the final mad rush, typically happens later.
Later how?
It happens when central banks aren't just talking about cutting rates, but are actually doing deep, sustained cuts. You know, when there's widespread monetary easing, maybe some real economic fear setting in.
Okay, and as of now, June 2025, we're not really there yet. We're hearing whispers of cuts, maybe one is coming, but it's not like the floodgates are open.
Exactly. We're in the anticipation phase.
Yeah.
So his thinking seems to be, if that's the case, maybe gold hasn't finished its run, there could be more room.
Makes sense. Can you quickly break down why rate cuts usually boost gold? For anyone maybe newer to this?
Sure. It's pretty straightforward, really. First, lower interest rates mean things like savings accounts or CDs. They just don't pay much.
Right. Your cash is just sitting there barely earning anything.
Exactly. So investors start looking for other places to put their money, and non-interest-bearing assets like gold suddenly look more attractive, especially if people think its price will go up.
The shiny rock strategy.
Got it. Oh, yeah. Second, when central banks loosen policy, sometimes called printing money, there's often a worry about inflation down the road. And gold, it's historically seen as a hedge against that, helps protect your purchasing power.
Okay, that's key too. What's the third reason?
Economic weakness. If people start predicting a slowdown, or worse, a recession, they often flee to safety. And gold is like the classic safe haven asset. People trust it to hold value when other things might be falling apart.
Right. Micky looks back at history in his notes too, doesn't he? To back this up.
He does. He points to the big one, the 2007-2008 financial crisis. Gold went nuts, right? From like $650 up to $1,900.
Wow.
But he emphasizes the real explosive part of that move came after all the quantitative easing, the QE, and when the easing policies were fully in effect.
Okay, so the initial reaction, then the bigger reaction once the policy actually hit.
Seems to be the pattern he sees. He also mentions 2019-2020, the whole COVID situation. Gold hit new highs again, jumped from around $1,300 to over $2,000.
And again, that was rate cuts, global crisis, tons of money being pumped into the system.
Yep. A similar cocktail of factors. So fast forward to now, 2024 into 2025, gold's already up significantly, maybe 35% from late 2023 to May 2025, according to his notes.
So is that it then? Has gold already priced in all the expected bad news and rate cuts?
That's the million-dollar question, isn't it? Or maybe the $2,400 an ounce question now. Micky acknowledges, yeah, it has pre-reacted quite a bit.
It's priced in the weaker dollar talk, the anticipation of cuts, the geopolitical stuff like the Middle East, Ukraine.
Right, and you see money flowing into gold ETFs. Central banks are buying too. That's all reflecting current expectations.
But you said he thinks it might not be finished reacting.
Yeah, because the key trigger, the actual start of official rate cuts by the U.S. Federal Reserve, hasn't even happened yet as of when he wrote this. The market's trading on rumors and forecasts.
Ah, okay. So if the Fed actually does start cutting and keeps cutting, say, later this year into 2026.
Then boom, that confirmation, that action could definitely kick off another leg higher for gold. It moves from maybe to okay, it's happening.
This leads into what Micky calls the panic-using idea, right? The potential for that really intense final surge.
Exactly. He thinks that final leg, which is usually the sharpest but also the shortest rally, tends to be triggered by something more dramatic.
Like what? What kind of triggers?
Well, things like a serious downturn in the U.S. economy, a hard landing, maybe even a recession, or a big stock market crash that sends everyone scrambling for safety.
Okay, classic fear triggers.
Or even worsening geopolitical situations. He mentions possibilities like Iran or tensions around the Taiwan Strait, something that really shakes global confidence. Any of those could light the fuse for that last sprint, as he puts it.
So, summing up his view on gold, the current rise is mostly built on expectations. The real catalyst, the widespread panic, the money explosion that fuels that final frenzy. Not here yet.
Pretty much. He even notes some technical stuff, like the RSI showing it might be a bit overbought short term, but flows into gold ETFs aren't at the crazy levels we saw in 2020. Suggests maybe there's still fuel left in the tank before that final peak.
Interesting. Okay, so that's the gold picture, according to Micky. Potential upside, but maybe the biggest surge is yet to come if certain conditions are met.
Right, but it's important to note, while he sees that potential, his actual preference for where he's putting his own capital seems to be elsewhere.
The transition. So he's not just hoarding gold bars.
Doesn't sound like it. His report clearly favors what he calls companies with moats.
Moats? Like castles. Economic defense systems.
Exactly. Strong competitive advantages that are hard for others to overcome. And he also likes companies sitting on big piles of cash. He gives examples like Apple and TSMC.
Okay, so why does he prefer these kinds of companies, these blue chips, over something like gold, especially if gold might still run? What's the thinking?
His core idea seems to be about long-term sustainable value. While gold might go up because of fear or rate cuts, he'd rather own businesses that have, real substance. Businesses that generate profits consistently year after year and have those protective moats.
So he believes that even in tough times or when money is easy, eventually capital flows back to these solid, reliable companies. The ones that won't just disappear.
That seems to be the logic. It kind of echoes what you hear from long-term investors like, Buffett or Howard Marks.
Yeah.
Focus on quality businesses.
It makes sense. Gold just sits there, right?
Yeah.
It doesn't do anything productive.
Exactly. There's a huge difference, Micky points out. Companies like Apple, Microsoft, TSMC, they generate cash flow. They pay dividends sometimes. They buy back their own stock. They grow their equity value over time. That's compounding.
Gold doesn't compound. It just appreciates, hopefully.
Yeah.
Based on sentiment or inflation.
Right. A company is like an engine creating more value. Gold is more like a store of value, different functions.
And Micky thinks these blue chips might actually rally sooner than gold in an easing cycle.
Yeah, that's another point he makes. Historically, often in the early stages of rate cuts, growth stocks, and tech stocks, the kinds he likes tend to get the first boost. They rally faster initially.
While gold and other commodities might see their big surge a bit later in the cycle.
That's often the pattern. So Micky's strategy seems geared towards capturing those earlier potential gains by owning these strong operating businesses.
Okay, but the trick is picking the right companies, the ones with the genuinely strong moats. You mentioned Apple and TSMC. Who else is on his radar?
Well, he talks about several tech giants. Microsoft is a big one. Their moat is huge. Office, Azure Cloud Services, it's all deeply embedded. Plus, tons of cash flow, stock buybacks.
Risks there. Competition, maybe? AI costs?
Definitely. Google Cloud, AWS from Amazon, they're always competing. And yeah, the AI arms race is incredibly expensive. Then there's Apple.
The ultimate ecosystem play. Everything just works together, keeps you locked in, and that mountain of cash they have.
For sure. Risks for Apple, maybe the China market uncertainty, people wondering about the next huge innovation, maybe playing catch-up slightly on the very cutting edge of AI buzz.
Okay, and TSMC, the chip maker.
Yeah, Taiwan Semiconductor. They basically have a stranglehold on manufacturing the most advanced chips.
Okay.
Building a competitor costs billions and billions, a massive barrier. They're crucial.
Geopolitical risk must be the big one there, right? U.S.-China tensions.
Absolutely. That's the shadow hanging over them. Plus, Intel and Samsung are always trying to catch up in the manufacturing game.
Who else in tech?
He also mentions Google, Alphabet, search dominance, huge advertising business. That's a massive moat built on data and network effects. And their cloud business is growing fast, too.
And Amazon.
Oh.
Not just the shopping site, right?
Right. Specifically AWS, Amazon Web Services. That's their cloud computing division. And it's an absolute powerhouse. Huge market share, massive profits. Even if the retail side has thinner margins sometimes, AWS is the engine.
Okay, so strong tech focus. Does he look outside tech?
Yeah, he also mentions what he calls financial and asset safety type companies, businesses with strong financial moats.
Like who?
Berkshire Hathaway is one. Warren Buffett's company. It's super diverse, owns insurance companies that generate float money they hold and can invest, and it's known for just solid risk management.
Makes sense. A fortress.
Kinda, yeah. Also, the payment networks, Visa and MasterCard, they have an incredible duopoly, basically. Everyone uses them, so every merchant has to accept them. Massive network effect, amazing cash flow.
Very hard moat to breach.
Extremely. And he also nods to a big bank like JP Morgan. A leader in finance, stable dividends generally, strong returns. Their moat is size, regulatory know-how, and just being embedded in the financial system.
Wow. Okay, so if you had to boil down Micky's whole philosophy here, gold versus these blue chips.
He uses this analogy I quite liked. He sees gold as like a short-term safety net, maybe a lifeline if things get really bad.
Okay.
But these blue chip companies, he calls them long-term battleships that can navigate through storms. He says he'd rather be on an aircraft carrier like Apple or Microsoft, something that can launch new things and keep moving forward than just holding an umbrella, which is how he views gold in a storm.
That's a great way to put it. Focus on the engine, not just the shield.
Exactly. It really highlights that preference for productive assets that can compound wealth over time.
Now, he didn't just talk about the established giants, did he? He mentioned challengers, too.
Ah, right. Briefly, yeah. The obvious example that jumps out is NVIDIA.
The AI chip king right now.
For sure. Their growth has been absolutely explosive, unbelievable profit margins. They dominate AI computing with their GPUs and their CUDA software platform. It's an incredible position.
But the risk, that valuation is sky high, right?
Yeah.
And competition is coming.
Absolutely. The price reflects massive future expectations. And AMD, Intel, even internal efforts at big tech companies, plus efforts in China, they're all gunning for a piece of that AI pie. So huge potential, but also significant risk.
So Micky's approach seems to be about finding those long-term compounders, the battleships, but also keeping an eye on the potential game changers like NVIDIA.
Seems like it. Betting on innovation and sustainable profit generation for the long haul.
All right, great discussion. But before we sign off, let's just hit that disclaimer one more time for good measure.
Yes, please. What we talked about today, exploring Micky's report and ideas, it's purely for informational purposes, maybe get you thinking. It is absolutely, positively not investment advice.
We really encourage you. Do your own digging, think for yourself, and seriously, talk to a qualified financial advisor before you make any moves with your money.
So the big takeaway for you listening right now, Micky's report kind of lays out this interesting contrast. You've got the potential quick thrill of gold's final leg if panic sets in.
Versus the slow and steady, long-term compounding power you might get from really strong, established businesses.
Which path feels more right for you? Are you looking for that short-term potential pop, the lifeline, or are you more comfortable on that long-term battleship, weathering the storms?
Yeah, it's a really good question to ask yourself about your own goals, how much risk you're comfortable with, all that stuff. Definitely something to chew on.
Indeed. It's all about finding what fits your personal financial journey.
Okay, that about wraps it up for this episode of Sip and Talk. Hope you enjoyed this look into Micky's thinking. If you did, hey, why not hit that subscribe button wherever you're listening?
Yeah, we'd appreciate that. And hey, another huge thank you to our friend Micky. Seriously, go check out his YouTube channel. It's called Mickytolife.
So much fun stuff there. He does hilarious memes, shares great music, talks about wine, posts travel vlogs. Just a great channel. Mickytolife on YouTube.
He's a good guy. Thanks again, Micky, for letting us peek at your notes. Very generous and brave.
Totally. All right, everyone. Thanks for tuning in to Sip and Talk.
We'll catch you on the next one.